Hola amigos investors, welcome to my channel. My name is Juan Estrella and I'm going to talk about Dropbox. So let's get started. Okay, so Dropbox. Right now I just want to talk about this company. Basically, this is it's a file hosting services. Basically, it's a hardware on the cloud. It gets its revenue from users who needs more storage in the cloud than the ones from the free version. Main competitors, we have Box, Google, and Amazon. Okay, so now we can just jump into the numbers. Right now, just let me sum it up a little bit. For the PE ratio, currently we have a 119.85, a little bit higher, but the good news is that we have a forward PE ratio of 23.73. As you mentioned, as I can remind, I just want to let you know that 20 is it would be great, but 23, yes, because for example, if we compare for the technology sector, 24, 23, that's a very good sign. Now the price to book, right now we have a high price of 11.46. Okay, so now let's jump to another data. Now I just want to let you know in regards of the price to shares. Basically the price to shares, it was 48, but today it closed to the 4.95. So that's a very good sign, even though that we are expecting just to have at least an basically up one or less, but this is still a healthy sign. Now checking the equity, right now we just have about 851.3 million. And if we can just also consider that, for example, another point, basically the current ratio, we have a 1.27 points. So basically, yeah, for me, I expect to have at least 2 or more, just in case that it will be an emergency and the company, they need to pay the debts. But however, I like actually, for example, also these healthy numbers. As you realize, basically it's just for every quarter, basically the company Dropbox is having an extra current ratio, so that's a very good sign. So, and actually is a correlation with this other graph, okay, with the equity. Okay, so now we just want to compare how well is the comparison the Dropbox with the sector median. As you remember, this is the sector of the technology, and the sector median is the 35.18 for the gap forward, and in comparison with the Dropbox, so basically we have 86.25. This is something that this is not a good number, but yes, it's because it's in relation with the technology that basically the hard drives basically they will have a devaluation, so that's the reason it's a little bit high. But if we don't count for the gap, for non-gap forward PE ratio, basically the sector median is 29.49 against the Dropbox is 28.70. Even as you see, it's just a little bit below, but most of the companies I would rather prefer just this just to check with the gap. Okay, so now just checking in the next graph for this one. As you see, basically today it closed at $22.12. Basically, aftermarket is just 1 cent after. As you see, I really like this specific price, and yeah, I really like it. I will explain you a little bit later what is the reason fall today. Now, if we just jump to the next one. Basically the related strength index basically is actually in the middle and just a little bit below. I don't want to say that it's over selling this stock, but yes. Now we just want to compare in regards of the valuation that we have with the same company in relation with the last years. Basically, currently we have a 24.88. I really like these numbers in comparison with another companies that is 35 or even 80 for some of them. This is a very good sign. Now checking on the 2020, we have $23.36. 2019 we have 28.41, and finally 2018 51.02. As you see, basically the highest year it was when it was the IPO for this company, that it was in 2018, and the lowest basically was in 2020 with the average of the 23.36. So basically, yes, I really like this number. Currently, 24 is not too, no, it's not too high. But yes, actually, for example, it would be great if we can just fall below 20 just to get an extra stocks. Uh, Okay, so now I just want to let you know in regards of this company, basically they don't offer a forward dividend yield. So we're just expecting this, basically these stocks to be to the long term. Now, something that I just want to let you know, one of the news that we have basically is that the Dropbox stock drops after planned cut almost the 11% of the workforce. Basically, it says that companies say that it will cut 315 jobs or about 11% of this global workforce. The companies say that the cost comes from its virtual first policy requires fewer resources to support an office environment, and it will lead to a more efficient and nimble company. So even though that's the reason, I just want to let you know that basically this company fall almost minus 6%, at least for to date. Is this is why, because basically this announcement. But don't feel afraid about this. Basically, this is something actually. I know that this is something bad for the people who was working for Dropbox, but actually it's good for the investors, because actually what we want to do is just to get the better numbers, and the people who works there needs to be efficient. Okay, so now jumping to another different numbers. This one I just want to show you something here. Earnings per share. I see that currently we have basically almost 8 cents per share. And as you see, in regards of the investors, basically they have it was below the expectation. Actually, it was almost 60%. Currently, it was 57.29%. The last report that was announced, it was in the November 5th, 2020. Basically, it was reported at 8 cents, and they estimate that for the earnings, it should be at 18 cents. Okay, so now I just want to explain you a little bit more about the graph. But before to do it, I just want to show you about another last number that's the reason I like this company too. It's growing numbers that even though that basically they have less debts, and also the earnings per share uh, are having a very good numbers. Currently, we have for the last report, it was almost 8 cents earnings, as you see. And if we just compare for the last earnings per share for the same quarter in 2019, basically it was a loss of 4 cents. So yeah, this is something that I like, that if year after year we are having more earnings. Okay, so now let's go to the technical analysis. In this case, I just want to show you that it was very hard just for me just to identify some resistance. I just identified basically one specifically, the yellow, but I just want to let you know how this stock is just going falling and I'm going upgrades. So basically, as you see on the June 10, it was starting just to have a fun, at least for the people who likes swing trading, and basically start with basically to the lowest points that it went. It was in November 2 because of the elections of Donald Trump. It was almost $17.74, and it was just going up to almost $25 a share. But basically, for example, at least the most common resistance that I just find out, at least, I mean, I want to be sincere. It was very hard just for me just to identify what it was the best resistance. So well, okay, so we can just identify the first one. So we just need to be sure that it could be just up to more than $23 with 67 cents. We have the average resistance that we have currently on the 21.89, and actually, as you see, basically it was almost close. Currently it close to the $22 with 13 cents 12 cents, sorry. Yes, this is something I just want to let you know. Now, something that I just want to let you know in regards of this stock is that I consider it's a good stock. As you see, we just compare some specific data that I didn't like it, but most of the data I really like it. So yeah, I just recommend just to have this stock at least for the long term. For the swing trading, yeah, it could be good too. However, remember that the volume of the stocks is sometimes is not high enough, at least for the people who likes to have thousands of stocks. So yeah, just to me, just to check on that. Okay, so yeah, finally we just want to check the last performance that we have on this stock. Basically during the week it was a performance of 1.69%, monthly minus 1.20%, the last 3 months an earns of 9.24%, the last 6 months 6.57%, the last year 21.35%. For this current January, it was just a performance of plus of 0.14%. Okay guys, so yeah, hopefully you enjoyed this video and see you on the next one. Bye.